What's happening? What's happening? What's happening, everybody? Oh man, did you miss me? Shebang bang, because I've been missing you guys too, man. Look, it has been going really bananas down here on my end, but we're finally getting everything worked out and tuned up, and we're back. We're back live, and just as promised, I told you guys that I was going to come back with a banger. My guest on tonight's episode of Plugged In, where we plug you in with the information that you need. And this is valuable information that you do need. Of course, ladies and gentlemen, the internet has been buzzing about this life insurance game. And you guys have heard me touch on it at different points. Waka Flocka was the one that brought this game to life when he was talking about doing $1 million insurance policy. And especially in the urban community, we just went ape crazy trying to figure out how to get inside this $1 million life insurance game. But your info plug, your favorite plug, I'm your favorite plug because, again, you guys know I plug you in with what you need. So I went out all the way to Orlando, Florida, and I got the guy, the man that knows the man, that is the man that can give you the information that you need. None other than my next guest, Chad Ourso, right out of Orlando, Florida, with the Denali Wealth Group. Just his name alone, y'all already know that sounds like some sizzle right there. So Chad's going to be dropping some science to y'all. I encourage you to get your pen and your paper ready because he's going to be dropping you some jewels. But let me stop right now and just introduce Chad. What's going on, my man?
Hey, I'm just glad to be here today. It's a great Monday. I had one of the best days in a long time today, and just glad to be here with y'all tonight.
So, Chad, we were speaking in the green room offline earlier. Now, you and I connected already on the insurance game, and that was one of the first things that I was asking you about was what is this $1 million life insurance policy? How can we make this thing a reality? How can we bring it to fruition? Because so many people in the urban community have been talking about this, and you actually gave me the lowdown and the real. Can you touch a little bit on that?
Yeah, I think that it's great to hear different communities and different folks out there, different places in life talk about life insurance, right? Because 5, 10, 20 years ago, even it wasn't the most exciting thing in the world, right? It was like your grandmother has whole life, maybe she buys you a policy or two. But it's really become more popular in just different age groups, younger, 30s, 40s, 20s. But yeah, we want to use life insurance to make your money grow over time, not just to pass on to the next generation. So when we think of using life insurance as a growth or accumulation vehicle, what we're trying to do is put money inside of a life insurance policy, have it grow tax-free, have it accumulate tax-free. And then, as the market goes up, you're going to be able to grow, participate in that growth. As the market goes down, Robert, this is the key. As the market tanks or corrects itself, you're not going to have to participate in those losses. You're going to get a floor of 0 or even 1%. And then the exciting thing about life insurance and using it as a vehicle for while you're alive, you're able to take that money out tax-free and use it for whether it be expenses, investment opportunities, be able to use it for real estate purchases, which a lot of folks do. And then the biggest thing, which we'll talk about today a little bit, as you take the money out, the money that's in the life insurance contract contractually and legally is going to continue to grow.
Really?
That account as an option, as a possibility, depending on how you do it. So.
Okay, so that's a question for me, Chad. Is now anybody that's over the age of 18, let me say that 18, in the working world, we have all heard about insurance, why you need insurance. But most people are just actually thinking about, especially, and I'm just going to say me, I've only thought about health insurance. Yep. What I can use right now, and when I die, that ain't my problem because I ain't here no more.
Yeah.
So, and that's how a lot of people's thinking is, and that's how a lot of people choose the job that they're on, is based off of the health side.
Yeah.
But a lot of people either they don't know, or it's just not a concern about the life insurance policy. Well, how is that the most you come across?
Yeah, I think most people kind of aren't excited about life insurance because they're thinking about, well, I know I need to get this for my family, which they love their family or their kids or their spouse, but they don't realize this could be a financial tool that could create wealth for them while they're alive, while they're here. Right. That they can change their financial position by using life insurance in contrast to a bank or an investment account or even a 401k. So
you can leverage your life insurance for financial, give you some financial leverage.
Oh yeah, definitely. Yeah, so you want to use life insurance if done the right way. You can create wealth while you're alive for your own use, for retirement, for business use. You can also obviously get the death benefit, but you can create some really cool things. And then as you get older, if you have the right policy, you're also creating liquidity for health events that might come up that health insurance doesn't cover. There's a lot of different ways you can use it, and we can get into some examples of that today.
Now, we've heard just over the course of my research, I've heard a lot about an index insurance policy, a universal, a term life, a whole life. Which way would you recommend your clients to go through, or is there a process or a system that how you choose the right insurance policy to benefit what they're overall looking for?
Yeah, it's all based on that particular client's needs. When you think of life insurance and the different options that are available, term life in general is used for a period of time. Usually it's short term, meaning could be 5, 10, 15, 20 years. That's going to be the lowest cost insurance. And it's typically used by clients for an emergency type need. Like if I lose my income while I have a mortgage, it's going to be a problem. I need to get the most amount of coverage for the lowest cost. That's term insurance. And then the whole life is kind of our old school version of life insurance that we talked about earlier, where it's you're paying a premium, you're getting a guaranteed return on that premium, and you're getting a guaranteed death benefit. Everything is black and white, guaranteed for your whole life. What happened, Robert, a few years ago, back in the 80s and 90s, is interest rates started to rise dramatically. I wasn't around, fortunately, I guess. Okay. But the insurance companies realized we need an alternative product because our whole life's not paying high enough rates. And that's where the universal life came into play. It became the flexible alternative to whole life. Right. Meaning that you can pay premiums, you can stop premiums, you can put more, you can put less, you can take money out, put it back in. Whereas with whole life, you can do some of those things, but it starts to get a little convoluted inside the account. So yeah, we just really talk to each client. They may want more conservative or more aggressive or the lowest cost. And we just find whichever fits for them, depending on that client.
Now, Chad, you've been doing this for a number of years. You want to give them a little background just to let them know that this is just not something that you just took a course on what's the name of that college? I forget the name of that little college that you can buy.
American College or whatever.
Yeah, New Hampton online TV college. Give them a little background about you.
Yeah, I've actually been doing this over 20 years. I started out in life insurance, believe it or not, right out of high school. I made a decision based on my family history that we had a lot of success in life insurance. My uncle has a couple state farms. My grandfather was in life insurance. So I actually made a decision early on. I think I was about 16, said, hey, this is what I want to do. Wow. So for the last 20 plus years, I've been working with clients, families, business owners, anywhere from the average Joe to the more complex cases. And so I feel like I'm pretty confident I've seen it all, but just, continuing to work with clients is my passion and seeing how we can implement solutions that are not just going to benefit their future, but also their current situation.
Okay. So now when we're talking about, you brought up tax-free. Now, that's a rule. Well, I won't say a law that's been on the books for a long time now. And I don't think people really fully understand what that means as a tax-free and being able to have access to that money while you're still alive. Because the average person, I'm gonna say just say me, I thought that it was necessary in the event of the death that I die and my family will be taken care of. I did not know that you can get that money while you're still alive. So let's touch a little bit on the tax-free part. Mm-hmm. And then we'll touch on how you can use that while you're yet living.
Yeah, we can definitely talk about it. I alluded to it a little bit earlier. When we had those rising in interest rates back in the 80s and 90s, clients figured out was, whoa, there's a little bit of a loophole here that I can use life insurance to get 18% interest and then just take my money back out. So the IRS got smart to that, as always, right? They figured it out. And then they put barriers in place. And the barriers really, it protected them, but it also protected the client. So now what you're able to do is put a certain amount of money in every life insurance policy. If you don't put too much, then you're able to take that money is going to grow tax-free inside the account. You can take the money out. As you take it out, it's tax-free. We do that legally via what they call a loan, right? Not a traditional loan because it's your money, but they charge an interest rate, and then most companies credit the interest rate, somewhat make it a wash. And that makes it a legal way to grow money inside of a life insurance policy and then take it out. Okay. So what a lot of people do, whether they're modest wealth or high net worth, is they'll let money get inside of a life insurance policy, grow it, take it out, have it still growing in the life insurance policy, and then use it somewhere else. So it's the legalist way I know of double dipping, because you could buy an investment property for $100,000 over here, and then you have a life insurance policy that's growing at 5, 6, 7% over here, plus the death benefit. So it gets crazy. When you do it right, it's like, wow, that's exciting.
And it's really so if you was to structure it right, there was no need even for a bank loan or a finance company. You can just get it from your life insurance to fund whatever you needed to use the money for, and then just pay the life insurance policy back.
Yeah, exactly it.
Yeah. So is that the same as saying you putting the policy up for collateral?
Yeah, that's exactly what you're doing. Yeah.
Yeah, because I don't think it's going to take nobody $1 million to get put in the ground. No. I mean, that's a heck of a funeral if you're using the whole millie to get dropped in the dirt. But how can someone attach that to like a trust fund? And that's what we was trying to set up with mine, was to set that up into a trust for my daughter.
Yeah, so a really good way to utilize these kind of policies is to put them inside of a trust and then create control over them, right? So for whether it's your kids, your family, when you get that $1 million in death benefit, when you as the insured passes away, now you're putting that money into a trust that's going to benefit, the kids or whoever's inside the trust. Then you have control over that money and you can pass that on generationally. So rather than making your children or your spouse or your charity wealthy, you can give them a little bit at a time. And then I think in the ideal world for most folks that accumulate wealth is then we can pass it to the next generation past that. And the money continues to create a legacy.
So that's where they start to come up with the term generational wealth.
Yes. It doesn't have to be you and me that have 7 figures to our name to pass on generational wealth. We can use the insurance company's money. So I can pay whatever that is, $200, $300, $400 a month to get $1 million. The million goes to the trust. The trust goes for the benefit of my children. And then God bless, they have children. Now we go to the next generation and we keep going.
That is some boss game right there. Yeah. And so, but you normally just don't have the people. Where and how would somebody be able to ask the right questions to get access to which? Well, let me back up, because I wanted to talk to you really about. I just learned some new things about this Gerber insurance policy.
Yeah.
And I didn't even know that was an option for people to take, because as most people, I just thought that we put all of this under one umbrella. But I didn't know that Gerber, which is for the Gerber baby food, everybody out there watching,
Yeah.
I didn't know that they had an insurance policy just for children like that. Can you touch a little bit on that?
Yeah, so there's smaller policies that are built just for children, really under 18, but really under 10 years old. You can get policies that have a much lower cost of insurance and can accumulate money a lot quicker. And so what happens over time is, instead of just giving your son or grandson, $200 for the birthday, you put it in that policy. Over 10, 20 years, that, those $200s of dollars could become 20, 30, 40,000 of cash.
What?
Yes. Think about it. 200, 200, 200, 200. And then after that, you also have a death benefit. So as the child gets older, hopefully they don't have any issues, but the death benefit is going to grow over time. And then they have that for their family should they need it, in the future. So
that would be the best option to take, is when the child is born, go ahead and put a term life policy on that.
Yep. Well, it'd be a permanent policy, a whole life.
A permanent policy.
Yeah. So it lasts forever. But yeah, exactly. You would want to lock something in for the child for the benefit of them, but also for their future. Yep. That's what we do. We do it all day long.
Because
we call them grow up plans.
Now, this is really interesting to me, because I'm thinking in the average terms, people's mentality of thinking. And I don't know. Some of you guys out there, y'all may know more than I do, which I don't know everything. But I would have never thought to create an insurance policy for someone under 10 years old, because I'm thinking in my mind, they got a long time to live. They're going to see a lot more years. And I would have never thought about creating or put an insurance policy on somebody that young.
Yeah.
You mostly think about, for the working class and your elderly, and then it's just something to use in the event. But I never would have thought about putting that in my children's name.
It makes sense. Yeah. I think about it sometimes and I get a little bit challenged by it because, what is the insurable interest for a child? I mean, we don't even want to think about that if something were to happen. But yeah, I think it's for the future. It's when that child becomes 20, 30, 40. Hopefully they don't have medical conditions, but some folks are going to get diabetes and other things, and they may not become insurable. So you can lock them in early. So that's number one. I think number two is the insurance company's goal is to bring in premium dollars, right? If they do it on you and me and a million other people, little bit by little bit, even when folks pass, they keep having premium dollars, and they're able to reinvest those for the benefit of everybody, but also, of course, for their bottom line. So I think that's really what it's about. The other thing people don't know is that life insurance on children is it's inexpensive by our dollars. But if you say, well, my million and their million, theirs is a lot more expensive ratio wise, because if not, it would be free. They basically increase the cost of children. So it's not dollar for dollar. Like, well, if you're 40 years younger than me, then it's only $10 per month. Well, they raised that a little bit, but in the end, it benefits everybody. I know a lot of adults that are in their 20s and 30s, and they have 20 or 30,000 in their life insurance policy in cash that some modest grandparent or parent put together for them.
Right. So how would somebody be able to set that up? Could you set that up with them and tell them how many years to put on there so it'll be as a benefit? And I think back to this. When I was in high school, I used to wonder how all of these, we call them the rich kids, but they were able, 16 years old, they have brand new, and this was back in the day when IROC Z's was a thing. So this has been a long time ago, but these kids was getting brand new cars, and it'll leak out. Yeah, daddy paid cash for this, or mama paid cash, and we just thought that they were rich. Yeah. But I didn't learn until years later that they was getting that from the insurance policy and paying for the car that way. And then when they went off to college or wherever else in life, they had enough money to start after college and buy the first house and things like that. So how do you set those numbers up to where you can pull it out at sweet 16 and then pull it out at 21 or pull it out at 25?
It's all designed inside of the policy, custom for that particular client and for that child. So we look at maybe paying for 20 years and being ready for college, part of college. We look at paying from 0 to 16 and then being able to take money out at that time. We can also actually show examples like, based on assumptions, right? Some assumptions, how much money is going to be available at 16, 20, 25, 30, so that the parent or the payor knows like, hey, this is what we're working towards, because they're going to pay that premium every day or every year or every month. The rest of their...
so you can pay the premium yearly as opposed to monthly?
Yes. Yep. You can. Yeah. Monthly and quarterly are the most popular. We actually have, or monthly and annually, I should say, are the most popular.
Okay.
So, yeah.
Okay. Now here's something else that I when I really started paying attention to this, and I didn't know that the insurance game was that large. When I went to open up a bank account, they had slipped a life insurance policy into my papers when I opened up the bank account. And I'm like, why would I need life insurance through my bank? And then I said, okay, never mind. And it was just $300,000. And I was like, yeah, that's enough. Stick me in the ground and have a nice little wake, whatever. Yeah. But then I turned around and I bought a car, and there was a life insurance policy in the car. So is it that much bigger of a game or as a business, or is everybody just trying to capitalize? I mean, I don't say everybody, but businesses now, I think businesses now have found a way to where they can make some free money. Because $300,000, it wouldn't have took that much to pay for that Jag. The Jag was not $300,000.
Yeah. Well, a very profitable part of the life insurance business is term insurance, or in your case, short-term insurance, meaning if I have a loan for a period of a car loan, say, or if I have a life policy for 6 years, for example, you're paying premiums, based on your age, your likelihood of passing away in those time period is pretty low, really, really, really low. Just based on your age and your situation. So they're just getting premiums. So there's a real need. There's a real risk. There's a real reward, so to speak, for the insurance or for you. But the reward or the risk is so low that it's just profit. And then also, honestly, it protects the bank. We don't
really.
We don't want to talk about that. What happened at Walmart, where they were insuring their employees.
Right.
But yeah, definitely the banks, with your signature, of course, with your permission, are able to protect the loan, and that's done as well for mortgages. So.
Wow. Okay. Yeah. Well, Chad, listen here. We're approaching that 25-minute mark, and I want to make sure that you give out your information. Now, ladies and gentlemen, for those out there in podcast land, Chad has my stamp. He's been fair with me. I can't take anything away from the work. He's even gone above and beyond. And he's explained a lot of things to me that I didn't know when I was going through one of the bigger name companies. And that was just jacking up we can do it. And then come to find out that we couldn't do it. And Chad gave me that explanation arena. So the reasoning behind that. So if you guys are looking to get into understanding more about the life insurance policy and the life insurance game and how you can apply that to your business and apply that to setting up generational wealth, Chad's going to give you all of his contact info. At least, ladies and gentlemen, nothing beats a failure except a try. Call the man, and I'll let you give your info to him, Chad, how they can get in touch with you.
Yeah, that'd be great. So my telephone number at the office is 407-493-1305, 407-493-1305. And my email address, I'll give you my direct one just to keep it professional, is chad@denaliwealthgroup.com, which is my first name on the screen, CHAD at Denali, which is that car, DENALI, wealthgroup.com.
Okay. And when are your hours are open, chat, for them to, how do you prefer them to just give you a ring or send you an email, or you want to tell them the times that you're open?
Yeah, we're open 9 to 5 every day, and then on or during the week, and then on Saturday I meet with clients from about 8 a.m. to 2 p.m.
Now, that is Eastern Standard Time, ladies and gentlemen, because he's in Orlando. So a lot of the California viewers don't call between 9 and 5 because it's already 10 and 9.
Right.
We're 4 hours ahead over here on the East Coast. But you can definitely set that up, and he'll find a way to get in touch with you.
My passion is helping people. So if it's outside of those hours and I can be of assistance to you, I'm glad to talk to you. My goal really is to serve and to help, and any way I can do that through my faith and just through our knowledge, I'm glad to share that with you.
And that's right, ladies and gentlemen. And then if you didn't get that information, you can always log in to bookrdm.com. I'm going to have Chad's info that's posted onto the website, so you guys can definitely follow up and find them there. And again, if anything, ladies and gentlemen, anything that we've learned now, you need insurance. Yeah. You need insurance. Stop. Y'all know how we do. You know, we want to stop seeing these GoFundMes to put y'all in the ground. You know, stop that. Stop that. We already know that everything that has a beginning has an end. Mm-hmm. Everything that's on this planet, even if your food has an expiration date, we also have an expiration date. And don't put that kind of burden on your family, man, where they got to be scraping up and borrowing from Peter to pay Paul. And it's not a lot. But the second part of that is leave your family in a better situation, after your demise. Now, we're not making this even so morbid and all of that, but we all know we're going to ride that train one day. So it's best to ride the train in luxury. You know what I'm saying?
Yes.
It's best to ride it in luxury, But, Chad, is there anything else that you want to drop to the people that you want to give them?
Yeah, no, I think you covered it really well there at the end. Talk with someone like Denali Wealth, where you can have a good conversation and just learn and get educated. I think that's number one. Get educated about options that are available to you, and then make a decision from there. That's what I do. I know that's how you run your business. Just, we're here to share information, and you get to make a decision. And that's how you're going to change your family's life long-term, is by exploring options and making decisions.
Yeah, and I'm going to talk with you offline real quick when we get ready to log off here, because I want to actually bring you in onto the online course too, to where we can open that up and give people an option too, if they want to learn more about that game, where you can set that up in some one-on-one workshop classes and things like that. But we'll talk about that offline. But hey, ladies and gentlemen, I thank you guys for chilling with me this half hour. I have gotten better. No more 1.5 to 2 hour podcast. So, man, we used to be on here having a ball. It was like a party, Chad, in the first wave. But I thank you guys for hanging out with me these 30 minutes. We're going to get better. I'm going to break this down into the real video, into reels, and I will be posting Chad's information on each reel. So you guys, if you missed it on the live, you can definitely catch it on the tail end. We're already on YouTube with the plugged in station on YouTube, and you guys will definitely be hearing this on Apple Pod, Spotify, and man, we're on 14 different platforms on podcasts, everything from iHeart to Apple Pod. So, hey, we'll see you guys on the other side. We're gonna get out of here because we business. We got to get back to work. So, peace.